All right, international stocks, they have been booming in late 2022 and especially in early 2023. There's a lot of reasons. We're going to go over why that is. If you haven't, make sure you subscribe to Map Signals. This is our latest insights piece. We give a lot of cool content. We're going to break down the international rally right now. So we believe the international stocks, they deserve a fresh look. So let's go ahead and get into some cool charts. So up first, we're going to just look at a pie chart of the globe. Right now, we can see that the US is about 60% of the global market share. And then you've got all these other emerging markets, international markets. But more importantly, check out this data right here. The S&P 500, so just look at the 5-year, 10-year, and 15-year annualized returns, has been crushing a lot of these other areas all over the globe. Now, this outperformance is probably not going to last forever. At least that is what we think. So why do I think that? Well, let's keep going through and look at the data. Economic data for one. So here we are, we're looking at the economic data that's beating consensus relative to expectations. And we're going to compare China, Europe, and the US. Now, you guys know Wall Street is all about beating consensus. If you beat consensus, that's bullish. If you don't beat consensus, that's all things considered bearish. Consider this, in China and in Europe, you can see that consensus expectations are thriving a lot more than the US. So listen, there is a lot more bullish undertones right now for the international market. All right, well, Luke, tell me about earnings. Well, let's get to that now. In fact, international earnings are outperforming the US, and this chart makes this beautiful. So this is comparing the 12-month forward EPS expectations, right? So the blue line, that's the S&P 500. You can see that earnings expectations have been falling, whereas if you look at the MSCI X the US, those expectations have been gaining. Now listen, stocks follow earnings. If they are expected to rise, make more earnings, that should make a bid for those stocks. And that is what we're seeing right now. What else can we talk about with international stocks? Well, number one, they are relatively cheap. This chart really explains this. So this is looking at international stocks compared to the S&P 500. And this green line is just looking at that international discount to the US. Now the long-term average, that's this black horizontal line right here. You can see that based on history, they are still relatively cheap. And you can see here, 12-month forward PE of the S&P is at 18.2. AC World XUS is at 12.7. And look at that dividend yield. Dividend yield for international stocks, almost double what you can get in the S&P 500 today. You guys remember many months ago, people were worried about the dollar. Well, they should be, right? This chart really explains it. So whenever the dollar is weak, international stocks tend to do better, right? You can see that with this chart. So above the 0%, that means a weak dollar. Below it means it's a strong dollar. You can see that the return for the market, whether it's in USD or it's the local currency, it tends to do better whenever the dollar has been weak. We believe the market for the dollar has peaked back in about October. We talked all about that even on this channel. Okay, so now that we have set up the stage, international stocks, any way you slice it, looks like there is some opportunity here. Now let's look at some ETFs of how you can play it. So the first one we're going to look at is the iShares Core MSCI Total International Stock ETF. A lot of words. The ticker is IXUS. So it's basically international exposure, no US exposure. Beautiful. Look at the amount of money that's been going into that ETF. This has been one of our top performing ETFs in the international space. Let's go to another one. This is going to be the MSCI International Developed Markets ETF, IDEV. You can see just like the prior ETF, there's a lot of selling. This is when the market got oversold. You guys remember, now we're starting to see very solid inflows into this area of the globe. Let's keep going. Now, if you want to be looking at emerging markets, considered IEMG. So this fund has about 63 billion in assets right now. It's got a healthy 3% yield, and it only has a 0.09% cost to the ETF. You can see there's been some nice little inflows recently as well. Look at all the selling. You know, that's where some of the big opportunities when markets get oversold. But anyway, I digress. Let's keep going. If you want to just look at Europe, right? That's been really hot. You can look at the MSCI Eurozone ETF, ticker EZU. This thing has been heavily on fire. And by the way, I've been putting a lot of this information out on Twitter, so make sure you follow us. It's Map Signals on Twitter. We were talking about the major inflows into international ETFs going back all the way to November, believe it or not. So this is a theme that continues to just get better recently. And then the last one we're going to be looking at is China. A lot of people were sour on China recently. Great way to see just how well performance has been is FXI. That's a China Large-Cap ETF. Again, tons of selling into an oversold market. Now people see this as potential value as that reopen play is happening. Monster inflows are going into this ETF. If you guys dig this, make sure to like and subscribe to our YouTube channel. Make sure to sign up to our insights. It's free. I'll see you guys next time.